energy market is getting more pessimistic on renewed fears over supply glut. The official data on oil inventories issued by the U.S. Energy Department raised fresh concerns about excess supply. Besides, risk sentiment deteriorated after Jerome Powell said that the pandemic could inflict long-lasting damage to the global economy. Meanwhile, the US dollar advanced to 69 rubles. Brent futures for August continue to decline. Still, the benchmark is holding above $40 per barrel. In the day trade, oil quote settled at $40.36 per barrel. July contracts for WTI were trading lower as well, around $38.22. Data from the EIA showed that U.S. crude stockpiles hit an all-time high last week. It seems that investors' concerns over excess supply are gaining ground. After a recent surge in oil prices, crude production began to recover at a much faster pace than was expected. Surprisingly, U.S. crude inventories rose by 5.72 million barrels last week, against analysts' forecast for a 3.2 million barrels decline. Earlier, the report from the American Petroleum Institute indicated a considerable build in oil inventories, adding to the pessimistic sentiment in the market. There is a risk that the increased output in the US may soon outweigh all recent gains in oil prices. Another bearish factor to weigh on the market is the downbeat economic projections provided by the Organization for Economic Cooperation and Development. According to it, the global economy is expected to contract by 6% due to the COVID-19 impact. In case of the second wave of the pandemic, global GDP will fall by 7.6% this year. The strengthening US dollar puts additional pressure on oil prices. Although Jerome Powell did not provide any details about the stimulus package, investors still believe that new supporting measures will be implemented soon. These expectations boosted the dollar's growth. It's very likely that if the dollar continues rising, oil may slip below $40 per barrel. However, market participants prefer to ignore this fact, hoping that the uptrend on the American currency will not last for long. Today, the US dollar index gave up all the previous gains after the Federal Reserve policy meeting. The dollar-ruble pair has also retreated from the mark of 69. Overall, the outcomes of the US Central Bank meeting did not have any significant effect on risky assets. On Friday, Russian forex exchange will be closed for holidays. This means that traders will most probably close their positions, thus putting the ruble under pressure. Given the prevailing negative sentiment in the global markets and falling oil prices, the US dollar may advance to the upper boundary of the trading channel. As a result, the dollar-ruble pair is likely to finish the day at the level of 70 points. The ruble may benefit from the purchases of foreign currency carried out by the Bank of Russia. The next tax payment period is about to start soon, which may contribute to the ruble's growth in the coming weeks. That's all for now. Thanks for watching and stay tuned.